a great trading week last week. Let's prepare for the upcoming week. So let's talk about the USD, right? Very bullish on the US dollar still. And I'm gonna start quickly with the daily chart. So the daily chart, I have two levels marked, right? March 2020 highs and April 2020 highs. Let's go to the 2 week chart. Now you can see that price has completely and utterly broken with those March 2020 highs. Next level here on the DXY is this yellow line right here, right? So this is basically the previous base on this market. And yeah, we're going all the way back to December 2020, December 2000, and most importantly, this zone right here, September 2002. So this is the next big level on DXY. We do have some, let's call it minor levels, right? Um, like these highs or the 104.20, which I think that the DXY already broke with. So let's go back to the daily. And yeah, right now DXY is struggling and breaking with those levels that I just pointed out. So if we look at the next big target to the upside, we have room for a nice 3% run on the US dollar. So let's look at what we can find out or we can find for next week. Right now, the DXY is in a no trade zone for me, on a no trade range. Let me explain to you what I mean by that. These are May 2022 highs, this yellow dotted line, and these are April 2022 highs. This is on the higher time frames, my no trade range, right? Anything, anything around these levels or anything ranging inside of these levels is a no trade for me. I am bullish, so I have a couple scenarios on the hourly. These are my two scenarios right here. Uh, these are my two scenarios, right? In my opinion, the DXY closed very bullish on Friday, right? So before this big break to the downside, right? I was looking for possible longs here at the bottom of this range. I didn't take these longs because it was clearly a bear trap in the sense that um, price broke with the previous trading day's low and the day before's low. So by price breaking with those lows, longs had no edge. And as you can see, longs got trapped before the move to the downside, right? So I stayed out and I was not going to take a short trade on the USD. I was only looking for longs. So right now, what I'm looking at here, possible break of this flag at the open, right? And this could, in fact, yield a very nice trade at the open. If we look at the risk to reward ratio, of course, that I wouldn't be trading the XY. I would look for uh, longs on the US dollar, all the markets that I trade. So basically, we have a 1.6 R, right, on a breakout to Friday's highs. And we have a nice 5R to the um, ranges highs. So if we extrapolate, and if this is in fact a bull flag, and we extrapolate the pull of the flag towards that breakout zone, we could in fact have a nice 7.5 R on a continuation, on a breakout continuation valley here. So that's what I'm thinking at the open. Of course, that I don't know how this market is going to open, and that's the main reasons that I'm going to wait a little bit because I don't know if we're going to open with a gap down, a gap up, or if we're going to open flat, right? And in either case, I need to see some kind of buying volume jumping in here before taking a long. So this is a 50-minute chart on the hourly. Looks like this. And yeah, should I miss this continuation, right, or this breakout, I'm sorry, my next buy would be at a break of these highs, right? So it would be something like this, a retest, a clear rejection before jumping in long here. Remember that we do have that 3% possible move to the upside on the USD, and should this play out, it will yield some very nice profits on the way. So have a safe trading week, and